welcome back to another live session from Forex Trading Wizard Academy. Traders, hope that you had an enjoyable weekend and we are ready for another big trading week coming up, and along with some of the exciting analysis as well as news. As you can see, gold, especially early, we have seen a significant breakout, and as predicted, the market is currently at this high of this weekly resistance line, which is potentially moving even up further. After this overextension, the market is currently at the top. So along with also gold, dollar yen, we have seen there is a reversal. Euro dollar and British pound US dollar, both of them currently bouncing back to the upside. Along with also you will be looking to see what kind of movement we can expect on Gbpjpy. So let's begin another trading week starting with gold. And also, if you guys looking at any other instrument apart from what we have discussed, also you can share on the live chat. We may be able to look at that if you see that there is a trading opportunity, because in this live session I may not be able to look at all the time at all the instrument at a time. So if you see that in instrument trending, you can share your thought. Now let's begin with first of all gold, as there is a new weekly and daily open. Would like to see how the market might be doing in this market. Starting with the monthly chart to see overall picture in this market. Now looking at monthly, what we can see that from the monthly chart, gold is, this is the monthly price action where there is a stronger breakout on gold. If you look at, this is the monthly support level that you can see, and with this monthly support, the market has previous months there is a doji followed by another monthly doji. Back to back 2 monthly doji has given this market significance to go bullish potentially, as what is going up is likely to go up. That's the law of trading, and it's a long-term bull market. We may see that potential trend continuation in this market. So let's look at the weekly chart. As first day of trading week, guys, we can see the market just trying to cross the previous weekly high, and as let's draw the level. Drawing level is always helpful to see on the lower time frame where the market in relation to this here. Now with this weekly market beginning to break to the upside and potentially to create a new higher high. So monthly weekly showing bullish. Previous weekly candlestick pattern is a long wick doji with series of higher low formation here, and the price also got rejected from this 10 EMA from the weekly perspective, and it's a sharply bull market in this instrument. Now looking at daily, where there is a daily price action, and if you look at here, you can see this is the daily bullish engulfer with a long wick at the bottom and also long wick at the top, right? So it's a daily bullish engulfer. Previous day was a bullish candle, back to back 2 long wick candlestick pattern formation in this market, which is giving a very high probability for this market potentially to trend back to the upside. Now if we look at the daily resistance here, you can see that this is the daily resistance, also there is a daily rejection here. Back to back 2 important daily levels, giving that this market potentially to remain bullish. Why? Because here the market grab liquidity, the smart money grab liquidity from both direction on the daily, has given a very high probability for this market to potentially continue to trend. Now looking at 4-hour chart here, that you can see this market here, this is the 4-hour chart. There is an impulse followed by this correction, impulse, correction, impulse, correction. The market is maintaining that bullish market structure. Now 4-hour chart here, you can see from this support level there is a after this doji, the market has made its move back to the upside here. So let's look at the 15 minutes chart and the lower time frame. We can see that from the lower time frame perspective, from the 1 hour chart and also the lower time frame, especially the 1 hour, we can see back to back 3 long wick doji. Now 3 long wick doji is quite important. If you guys look at it, you can see that with this long wick doji formation from the 1 hour chart here, the market has made its move back to the upside, and you may see that the price to potentially continue to the upside here. So, and if we look at this trending market, what we can see that this market has made its move back to the upside and then maintaining that series of higher high and higher low, okay, which is in an uptrending market structure. And if you look at here, you can see this is a manipulation here. There was a massive manipulation. The market has tested this high and also tested this low. In both directions, the price has crossed that key area. And with this cross of this key area from this support level, that you can see the market has broken back below and then revert back here, pull back, another more pull back. So here is what we can see. The market is maintaining that bullish market structure from the 1 hour chart. Here you can see there is a long wick candle here from this support level, and as the market is approaching that resistance line where the price may potentially back to the upside, and we could see that this market to cross that high, as we can see in the support level from this manipulation zone, the market has created this overextension to the downside. Now we might see the price to cross up and then potentially to create an overextension to the downside. Now 5 minute chart, that you can see it's a bull market, and here as you can see this is the 5 minutes price action where there is a breakup structure is needed for us to find potential entry. Now here I will be waiting for a possible breakup structure. We can look at the intraday levels. So from the 4 hour, this is the previous resistance turn support, and from the lower time frame, if you look at the 5 minutes, we can see that it's a bull market and breaking that long-term resistance, and we may see that potential trend continuation in this market, waiting for a breakout here. So thanks for joining the live session. Traders, if you can hear me, say yes. I hope that everything being broadcasted well. Welcome Roro, MAG, Crazy, Alpha, Everlyn, Roro, Ojas, Pritham, Everlyn. Welcome. Welcome. Thanks for joining. Now let's look at here in this market. As you guys see that this is where it's showing that bullish market structure, and now it has just deviated from that high. You can see the market just has broken out of that resistance line, right? So with this break of this resistance, now you can see this is a there is a 20 EMA, there is a 10 EMA. Okay, so 20 EMA below, 10 EMA above, which is literally a potentially a bullish market structure. Now in that market, as you can see, the price has just deviated from this resistance line, and we may see that this market potentially to continue to back. And also early there was an analysis was posted. I hope that you guys have seen that. I would highly encourage you to watch all the analysis that I'm posting, as with those analysis you'll be able to see that a clear understanding of the market structure. And regularly I'm posting this analysis to help every members, every subscribers in the channel, guys. So To access the regular daily analysis that I'm posting every day in London session time, make sure you subscribe to the channel, press the notification bell so that you're not missing those analysis that I'm posting in addition to the premium VIP group update as well as the trade setup. Now here is with this movement that you can see on gold, the 20 EMA below, 10 EMA above, and the price action is above the 10 EMA. Now why do you guys have seen that I do have two indicators in my chart, right? Now indicator is not my primary trading system, but why do I put that EMS, right? EMS are, I don't consider EMS as a kind of indicator. These are the mean value, right? So it's the average where in relation to the mean value of this price. What I would say that the true intrinsic value of an asset in relation to the current market price. So this is a very important concept, especially if you want to be a better trader, then you will understand that actually how it works. So you will see that every asset or anything has a true intrinsic value in it. Now with that true intrinsic value, the market, you will see that more often deviate from that true intrinsic value. Either you'll see it's an overbought or oversold market, and more often they remain overbought or oversold. But if you can identify when the market is coming to its true intrinsic value, that's where the opportunity comes. And you know, more often we discuss about also the role of news, the data, how do they play the role to bring the price back to the true intrinsic value so that it becomes ready to buy again or ready to sell again. So this is where EMS help also, that you can see that when the market is above 10 EMA, if you see that the market is way above 10 EMA, that is where you would see this market potentially to have a stronger trend. And at the same time, when the market goes too far from 20 EMA, that is also another important point to look at. Keep in mind that 20 EMA is like a rubber band. So when you stretch something far, okay, the longer that you will stretch, the faster it's gonna come back to the original value, right? So that's why the 20 EMAs act as a rubber band. So whenever the market far from 20 EMA, don't buy this market if you see that the price is in a very stronger bullish market. Wait for the price to come back to the 20 EMA and then boom, return back again. You'll see that over and over again. This happens. Look at this one here. Okay, so if you see that a nice looking trending market, you see that whenever the market touches the 20 when it is very far, a straight drop to the 20, boom, bounce back again to the upside here. You see the same thing here. When the market too far from 20 EMA, straight going back to the 20 EMA and then boom, coming back to that again to the 20 EMA. And there is also the average true range relationship to it. There's a lot of ways that you can find an edge in the market, and if you know that proper risk management, it's gonna be easy for you to trade the market every single day. Now let's look at here on, you can see the market after break of this high, it just keep pushing back to the upside. Now from the weekly, it has crossed that weekly high, and it may now potentially continue to back to the upside to create a new higher high. So this is what we're looking to see, that the market, how it may potentially create an impulsive move back to the upside in this instrument. So looking at in that market, this is the, you can see this is a pin bar, And also there is another one here which is also showing that bullish impulsive move back to the upside here. And looking at the lower time frame, as I mentioned earlier, this market here is the move, okay, then pullback, and then more pullback, deeper pullback. The market is maintaining that series of higher high and higher low, which is in an uptrending market, and we could see that the price to potentially continue to trend in that direction of the major trend. So looking at even the 1 minute chart here, if you look at that, this market is in a very sharp uptrend at the moment. So we'll be waiting for a possible break of structure. Once we see the market has broken from the structure, we can look for that entry in this market. Where is the EMA indicator? Is it overbought now? No, it's not overbought. It's not overbought. Overbought market you see when also RSI might be able to helpful to you when you see the divergence. Okay, so that's also an important point that you can look at when you look at the RSI divergence. Also will be helpful to you for finding overbought or oversold market. So there are many ways you can find out, but at the moment we can see that XAUUSD currently showing that bullish momentum, which is breaking back to the upside. Now this is a daily price action. We are in a zone where the market is trending back to the upside, and we may see that potentially continue to trend in the direction, in the major direction of the trend. So if you look at here, what do you see from the 1 hour chart? That the market is showing a bullish structure. So if this price currently coming back to that lower time frame support from the 1 hour, they're expecting this 5 minute chart to potentially trend back again to this support, and then to continue to trend again in the major direction. So we'll be waiting for the market to show its hand here, and to see, as soon as we will see the market is showing its hand, we will be looking into opening the position here. Now, as I mentioned earlier, guys, the patience is key. We will be waiting here for a break of structure, and once we see that the market has broken from the structure, that's where we will be entering, because that is where the high probability trades are up. Now 4 hour chart that you can see, this is where the market is from the intraday showing that bullish pattern. Now if we look at a little bigger picture, guys, keep in mind that bigger picture is where you'll understand the overall direction in the market. So when you look at the bigger picture, you can see the smaller picture in detail. In fact, the market moves as per the bigger picture. The market moves as per the detail, right? So if you look at here from the 15 minutes perspective here, we can see that this market is in a sharp uptrending market. So you see, this is a key zone here that you can see the market is showing that bullish momentum. And that being said, it's a bullish market structure, waiting for this price to show that the market is coming here, breaking that low, and then trending back to the upside to create a new higher high. Now looking at here 5 minutes perspective, waiting for that market to break below the structure, and break of structure is key. This is the 5 minutes move here so far, which is the previous this is the resistance here. So which is a long-term resistance. Now we will be extending that level to see if it is coming here for a retest. And once we see the market has come back here for another retest, we will be entering into the new position here in this market. I hope that guys you're enjoying the live session. Make sure you give a thumbs up if you like this stream, and also subscribe to the channel if you haven't done yet. I do come on live twice every day. Today we had our early session was missed due to an unavoidable reason, but every day I'm coming on live twice. One is NY session, the other one is in this time on one is London session, the other one is in this time on NY session, to cover both of these sessions best trade setup, as the market more often breaks out during those time period. And you'll not find always trading opportunity in the market. The only thing that you can find is most of the time the market consolidate. Now you can see here currently it's on a trend, and when the market trend, that's the best time to trade the market. As you know that the market moves only 30 to 40% of the time. 70% of the time the market just move in a sideways. So ask how to use RSI. Well, to use RSI, I'll be showing you. Also, there are some lessons also on the channel about the RSI. So if you go to the RSI, if you go to the indicator section, just search for RSI, so relative strength index. And then when you see the RSI, this is the RSI. You can keep all those value as it is. Okay, so if you go to the settings, normally, ideally 14 period, you can use SMA as the and the length 14, all other figures as default, so you can keep it as it is, because normally this is what everyone uses. And then you can find the RSI, and you can see that the market, if you look at the 5 minutes, it's over this one, so it's showing as overbought from the 5 minutes. But I wouldn't trade based on this value here, but the divergence sometimes helpful. So if you look at that RSI divergence, how do you identify the RSI divergence? Is from the trend, right? So if you see that the market at the price action creating an uptrend, so if you look at, especially when you look at this chart as a line chart, so if you look at the line chart, now you can see that how the price is moving and how the RSI is moving. You can even draw lines. Okay, so you can draw those lines here and also draw those lines here. So both of these, now you can see it's getting slowly, the trend is getting very sharply bullish, but the RSI getting weaker. You see that at some point you might see that the market trend is up, but the RSI, you see that is slowly building that kind of pressure. The RSI might get bearish. So that's a divergence. So basically there's a disagreement between the price action and the indicator, which is called the divergence. So divergence could signals potential breakdown or a change in market sentiment. So that's how you can use the RSI to give you some ideas on how to trade the market. Now, welcome. Are you still waiting? Yes. I look at hidden divergence also. Yep. So you can look for hidden divergence. So many ways. Yeah. Now, basically, divergence is can be used in addition to the price action confirmation. For example, if you see that there is a big head and shoulder on a monthly or daily resistance line. So if you look at daily, you can see the market just overextended to the daily. Now, once you see the market has made a big head and shoulder on the daily resistance, and the RSI also showing divergence, that's where the trading opportunity comes in play. So it's an added confluence to be considered for entry. Now, otherwise, I mostly make all my strategies that you guys seen that based on price action and 10 and 20 EMA, because too many also indicators might make you paralyzed. So if you see that too much information might make you difficult for you to make your trading decisions. So the best is to find one effective edge. Either you can use RSI, maybe you can just trade based on divergence and then just become good at it to read it, because that's how it works. For me, moving averages are very effective that I read, and more often it becomes easy for me to read the market based on the moving. And you can see that it moving averages, in fact, especially the exponential moving averages, use a very effective dynamic support and resistance. Now you can see here the prices, once the prices crossed that low, it made its bounce, and every time it's respecting the 20 EMA, right? And then revert back here. So if you can find that edge, it works. So it depends on how you're gonna use it. For example, the Bollinger Band. Okay, Bollinger Band also. Let's look at the Bollinger Band. Okay, so if you look at the Bollinger Band, also an effective indicator, right? So if you look at the Bollinger Band, you see that whenever the market deviated from the Bollinger Band, it bounced back to the upside. So if you look at the 5 minutes, that lower time frame, you can see that whenever the market deviate from those areas on Bollinger Band, it bounced back up and then started to move again. So you'll see that even with the lower time frame, the 5 minutes also. So from the Bollinger Band, it always got rejected. It depends on the strategy that you are using, but you need to stick to one specific strategy to find the edge in the market. And if you jump from strategy to strategy, also sometimes it becomes very difficult for you to understand which strategy works well. Therefore, the best way is to find the best one. That means that which one works more, and then trade based on that. For me, let me tell you, my secret of trading is trend trading, right? So how do you trend trade? Let's understand that, guys. If you either, Kevin, welcome. First time a configuration for swing traders. EMA. Okay. Now, how do you trend trade? Simple, right? You don't need bunch of information. Either you are trading on 4-hour, daily, 1 hour, 5 minutes, 15 minutes, 30 minutes in all time frame. Okay? Trend trading is the most effective and the profitable trading system one can ever have. Why? Because when you are trading with the trend, you can see the market completely different way. And in case if you have a trade that you have opened, probably not going in your favor, that's fine. But when it goes in your favor, when you are right in your approach as a trend trader, you see that the market may go a lot. So you can see that here, once the 10 and 20 EMA crossed over from each other from 5 minutes, and also the 15 minutes, this market is currently in a sharp bullish trend, right? So you can see that. And if you look at the 1 minute here, also the same thing. That's a sharply bullish market. And here, once the market has managed to break from that structure below 20 EMA, and then again it just got revert back to the upside, which is, you can see the market is above the 10 and 20 EMA. So, and it started to revert again to the major direction of the trend. So that's why when you are trading with the trend in with the multi-time frame approach, that's where the key. That means that you need to trade with the trend and also looking at the multi-time frame analysis. For example, trading on 5 minutes, look at the bigger picture, look at the 1 hour, 30 minutes time frame, how the market has evolved in those time frames. So once you can identify the multi-time frame trend along with the lower time frame trend, that's where your trading probability become higher and higher, and you become good at picking better trading opportunity. So this is what keep apart from a successful trader to a beginner trader. So looking at that one on Xauusd, you can see that this is a currently bull market and it's strongly pushing back to the upside, and we'll be waiting for a settle down the market to break from the structure, and then we will be entering. While also I would like to see some instrument apart from Xauusd, also Gbpusd that I was looking at, and also the euro dollar also started to create a bullish market structure. If you look at British pound US dollar, you can see this is the weekly price action where there is a weekly drop to that support from the weekly time frame. It was a break of structure, completely opposite direction of the trend from the weekly, and now it's again moving back to the upside from the weekly and from the daily as well. British pound US dollar, we saw that there was a complete break to the support level, and then it is pushing back to the upside. So we might see some potentially bullish market structure on British pound US dollar. So looking at the lower time frame, which is also showing that bullish pattern, and we may see the market to continue to move back to the upside on this one on Gbpusd. If there is any trade coming, also we will be looking into that one for entry. Here is what I am looking at on gold on the 15-minute chart here. that you can see showing that bullish, and we are almost nearing to the close of 1 hour candle again, and that 1 hour close maybe you can see back to back 2 1 hour candlestick pattern showing bullish price action. From the 4 hour also you can see that pretty sharp bullish impulsive move back to the upside. From the 15 minutes that you can see the market is trying to fill that long wick at the top from the 15 minutes chart on Xauusd. So we'll be waiting on the 5 minutes. This is the support that I'm expecting for the market to break below and then to give us that entry opportunity in this market. Now, first day of trading week, the patience is key, waiting for the market to break below to the support level and then looking into entry. I hope that you guys enjoying the live session. Make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I am posting every single day. So in terms of calendar that you can see early today we have seen the CPI on NZD. Tomorrow coming up 7:15 p.m. in my zone. There will be some volatility on Gbp. And this week is Gbpjpy, AUD, Euro. And so if we look at the calendar just to have an idea of this month, what kind of movement we can expect. You can see the Gbp, AUD, Euro, Gbp, Euro, USD, Euro. These are some of the pairs that coming up pretty packed on Thursday. Big day for dollar, Euro, British pound, US dollar. And tomorrow as well with the Gbp, we might see that all gold as well as British pound US dollar gonna be pretty volatile. Here's the market is slowly pushing back here to the upside with initial bounce, and we can expect it to revert back here to the support and then to return again in the direction of the trend. As the market is moving with a stronger momentum, as you guys see that this is the first day of trading week. Now with the weekly opening is always the market remains in a in the first day of trading week, as we started to trend with a bullish momentum, we may see that the market to possibly to go back up a little extended to the upside here. So if we look at the 4-hour price action, the nearest level of resistance that currently the price is approaching here, delete all of that. Looking at the daily, some of the key level on the daily time frame that you can see the price to reach and retest. These are some of the key levels that you can look for potential trading opportunity on Xauusd. Now you can see here is the narrow doji, and this narrow doji, the market has made its move back to the upside, where an important level of resistance, the price is maintaining that bullish market structure here. And so if you look at this one here, 339394 level, now currently 3388 level. So expecting it to push back here. With this move, currently now looking at the 15 minutes here, which is pretty sharp bullish market structure, and the 5 minutes as well. Now there is no significant breakover structure or pullback in this market, so that is giving a probability for a breakover structure here. Now the current level that I would like to see is here, because this is the starting of an initial move, and that is also the 1 hour support. Now this 1 hour candle is closing, it's a full body green candle, 6 minutes remaining, and I don't think that the market will be able to drop to this 1 hour support with the next, that 5 minutes or 6 minutes. Instead, it may continue to push back to the upside here. But if we see the market on the lower time frame has managed to break from the structure, and that's where the opportunity. Now after the 1 hour candle close, if the market straight drop to this support or extend back below, that is a big opportunity to go long here again on the lower time frame. So that's also the 1 hour 20 EMA if we look at, and that's where will be the 5 minutes structure. Now waiting for the next 5 minutes candle to close. So this is the 1 minute, which is slowly building up potentially a bullish market for a bigger move back to the upside. It's currently overextended and waiting for that move. What about the scalpers? Look at Gbpjpy. Were in buy before. What trade are you hoping to take? Gold. Okay, so quite a few questions. First of all, why didn't I buy before? We bought before, but I was not on live. Now, we see that there is a breakout. the only way, the best way is to remain as a profitable and successfully to trade the market is not to buy when everyone is buying. Okay, the first thing. Secondly, buy when the smart money has taken profit and ready for another buy, which is trend continuation. Okay, so for example, when you see that the market consolidating and then boom, suddenly breakout, don't buy on a breakout, because more often you see that those breakout is just a false breakout and the market revert again. Instead, wait for the market pull back to, you see the 10 and 20 EMA around that zone here, and then buy. That is trend trading. And there's a specific rule based strategy, guys, for those who have gone through our TF or the trend following strategy. If you are our member, you can see all of this in your student dashboard on the website. That's why we discuss about the 20 EMA retest along with the price action confirmation for a long hold entry according to the trend following strategy. Trend following strategy is the best ever strategy that I found and I trade, which is the best way, because when you follow the trend, you can see that the market in fact more often will go in your favor when you know how to enter based on the trend. Can I explain more on the closing of the and 20 EMA? Now, to understand the market structure based on the 10 and 20 EMA, okay, so when you see the market like this, the price above both of these EMA, when the 20 EMA below, 10 EMA above, for those who are, as I mentioned in the academy, you can see those trend following strategy, how it was explained. It's very simple, but to give you a generalized idea on 10 and 20 EMA. So as a rule of thumb, when 20 EMA below, 10 EMA above, which is bull market, and in this bull market, whenever the market is coming down to this 20 EMA after a breakup structure, you see the market slowly again reverting back to the upside. Now, how the price moved to that 20 EMA is also very important, because not all move or all breakdown to 20 EMA will be successful. Some of them will just be a reversal. Then how do you know that which movement or which breakdown is a possibly trend continuation? Because the market will leave a clue, right? There is always a clue to read that. That's where the trader, that's where the smart trader, look for the ATR, look for the bigger move, look for the fake move. That's where you see the market. This is where the smart money buying the market or selling the market. When you see that fake move, breakup structure with a bigger ATR candle, and then wait for the market to just reverse back again to trade with the trend. That's where the key here to understand the market structure. As you can see, the market is in that area where the price is heading back to that level, which is 337475 level, which is an important support level here. And from this support, there is a bounce, and the market now trending to that level. Looking at the 1 hour here, Okay, so this is where there is a market structure. From the 1 hour candle closed, and after this initial pullback, it's now trying to fill that long wick at the top. And as it is a very sharply bull market, if you look at the 15 minutes, this is the 1 hour support and the 5 minute support. Here we could see a possible breakup structure. If the market dropping to that level, to this support, with this breakup structure, that's where the entry in this market. I hope that you guys enjoying the live session. Make sure you give a thumbs up. Okay, so here with this movement, with this move here on Xauusd, the 5 minutes chart, you can see quite a few narrower candle. Now at the top forming dodges, so that could be a sign of breakup structure. Here I'm waiting for that to happen, and this is in a zone where at the top it's not gonna buy or not gonna sell here until you see the market has shown its directional bias. Now quite a few smaller candlestick pattern here. So if you look at the 15 minutes, also the same kind of price action that you can see it's forming. Observation is key, guys. Keep in mind that the true understanding of the market comes from long observation, because when you observe the market, some of the things that you even may not be able to backtest, very difficult to backtest some of the price action, how the market in fact behave. It relates to the timing. It's related to the how the candle opened, candle closed. You see that if you see a doji or a pin bar closed at the top, could be a bearish. But if you see that same candle, if the price very early come back to that opening and closing from the top, more often this price will go back up again. It's a big difference, right? The candle closed as a pin bar or didn't close, but the price has hit that support, and then you'll see that more often this price will revert back. So it's only the timing. What do you mean by this? Let's say this candle, this is the 15 minutes, right? If you see that this 15 minutes candle closed here as a pin bar, more often you will see the price will revert back again. But if this candle in the first 5 minutes has gone up and the next 2 minutes has come back here, it still is halfway for this candle, it more often you see it revert back again to the upside, only because of the timing. There are a lot of psychological factors, because the market is driven by the human psychology, right? People think, believe, and the market moves accordingly. So therefore observation is very important. And if you guys are passionate about trading, like if you want to be a full-time consistently profitable trader, then don't miss out to observe, and also don't miss out the live session. Here we discuss many of the things that you will not find anywhere, as this some of the things even it takes a lot of time to figure out what happened, why that happened. And also keep in mind that be more curious, always ask question, why that happened, what happened, right? Gbpjpy, Gbpjpy is forming a very interesting market structure here. There's a long wick here on GJ, and we might see the market is coming here to wick fill. So you can see GJ, there's a potential for weak fill, but this market may require stronger liquidity for a drop here on GJ. From the daily, we saw there was a massive gap open and initially bounced back to the upside. It's a bullish market, but I think there might be a breakup structure here in this market, as there is weekly open. It's a big gap opening on the weekly, almost 121 pip gap open on Gbpjpy. So that gap open possibly to become a bear market, but it might grab like this a long week and then could continue to drop here. So therefore more time needed to see what kind of market structure is forming. Currently it's in a very narrow range. Going back to gold again, that we can see from the lower time frame. Okay, so 5 minutes price action. After this pin bar, we might see now what I think possibly a breakup structure. If it from here revert back to this support, we will be opening buy in this live session, guys. Get ready for it to see if this market is coming for deeper drop, which we may see, may not see, depending on how the market is forming, as this last hour before the 4-hourly close. Therefore this candle may have quite significance in it, and if this market managed to have a breakup structure to this support to 3374, we can look for an entry, or along the way whenever it breaks from the structure, we will be looking into the trade. Now in this area, that if we look at the lower time frame again, where back to back couple of dojis here, and with this doji the market has made its move back to the upside. Here is a support level, expecting it to bounce back to the upside here to create a new higher high in this market. So this long wick candle, and yeah, we might see that breakup structure in this market. That breakup structure could lead the price back to this support level. We might see the price to come back here to this support, grab the liquidity, and then to trend again in the direction, the major direction. Here is if we look at 30 minutes and the 15 minutes time frame, 15 minutes candle closing also as a doji, which is from the 5 minutes. We see that slowly the market is building up the pressure, so it's a highly bull market. We'll be waiting for that breakup structure to potentially to cross the 20 EMA, which is also an important level that we can look for. And here is also 15 minutes 10 EMA. Let me delete those lines here so that you know that exactly where we can expect this market to come back to retest, potentially to reject back again. So if we look at the 15 minutes here, you can see multiple times the price crossed this 10 and 20 EMA and then has got that rejection back again. Now two 1 hour candle that you can see here. Okay, these two 1 hour candlestick pattern that you can see, there's one here and there's another one here. Two important 1 hour candlestick pattern that you can see was a bullish candle with a one here which is narrow bear candle, and that's what waiting to see that this market to possibly break below here to create a new lower low. Would like to see that break of structure and then where we will be entering into the position. The best way that I keep that calm and patience when we are trading is to not to have an expectation on the market. So this is what also there was a legendary trader said that some traders trade like that coming to the trading desk and need to take something to home, but in trading you don't have to take anything to home. Okay, so trading is you need to completely give up any expectation on the market and just relax and watch the market, have fun. That is trading. When the trade appears, try to find out a lot of reason that why you may not take that trade rather than reason why you should take the trade. And then you started to see that some of the trade you can't resist, and that are best trades. So for example, if this market from here dropping here, it may be a trade. Dropping here, it may be a trade buy, but dropping here, overextension, and then reverting to the upside, also a trade. But this one is the best trade, right? Because if the market drops to that far from the 4 hour, and if you look at the 1 hour here, you can see that it's a bull market, complete breakup structure, a very, very good trading opportunity. If you look at the past here that we are talking about, you'll see that kind of trade more often comes for you to enter. Here is a complete breakup structure, okay, with one single move right to this key level without crossing 10 and 20 EMA, and then return back to the upside. And also you can relate it with the higher time frame price action. So if you look at the 5 minutes here, you can see the 1 hour price action where it's just on the 1 hour support, right? Candle closed and then revert back to that 1 hour support, and from that 1 hour support, boom, a complete break below, and then return back again to the upside. So this kind of trade that you can't more often, you'll find that over and over again in the market that you can't resist. Let me show you some more trades in that way. And those trades, the market will more often will give you an opportunity to enter once you know that how to do that. This is the 5 minute chart, and if you relate it with the 1 hour, you can see just from this resistance it's got the rejection back again. So that is why you need to look at the multi-time frame when you see better trading opportunity, and that's what we're waiting here. This market to break from that structure to the higher time frame support might be on the 1 hour. So if you're looking at the 5 minutes on the lower time frame, we might be looking at the 1 hour support that we have drawn here for the market to drop any of this level and then to potentially to reject back again in the direction of the trend. And this is already pretty sharply overextended with the first day of trading week, and we may see that potentially continuation back to the upside. And this week might be a big bullish week for gold, as we have discussed in the previous analysis as well. And I'm looking forward to take a couple of positions once we see that entry. Why buy at that zone, sir? So you are not buy. Okay, so why buy in this zone that I have written, the level that you're asking that question? Because if you look at the 4 hour again and the 1 hour, those level, this is where the previous resistance line is. You can see that, which is turning support here, right? And the resistance turning support, giving high probability. If you look at here, that you can see, okay, so this is the previous resistance, which is turning support here. And in those areas where, okay, the previous resistance turning support, these are very important level, right? If you look at the again the 1 hour price action, which is sharp bull market, and in that bull market we would like to enter on a pullback on a level where there is a probability, because there are two fundamental questions that we need to answer before we enter into any trade. The first one is the W question, which way to trade, like should you be buying or selling the market, either to press buy or that red or blue button. Now that W comes from the market structure. What is the trend in the market? That you can see that we already discussed quite a few times. Finding a market structure is easy, right? Very simple. Not the indicator, but creating the market that is creating series of higher high and higher low. Once you see the market structure is bullish, the only thing that you will be looking to is buying. Once you are buying the market, you found the market structure is bullish, the next thing is, the next W that you need to answer is when. So you found the market structure, but you can't just buy from here or buy from here. No matter how is your trend accurate in the directionally, you are 50% on that. Still you have an entry criteria to fulfill to enter, which is very important zone to, and that comes from the price action confirmation and the liquidity. So that's where it comes to the price action, when to enter into that trade. So if you look at, this is the 30 minutes, 1 hour, and the 15 minutes price action, where a 10 and 20 EMA close from each other. Okay, 20 EMA, 10 EMA, expecting that the market to break below. And we can see there's a 30 minutes closing also forming a potential doji here. Okay, we can see that break coming, and there's a 4-hour close coming. You can see if that 4-hour candle close is coming for a deeper pullback, that is also a very good area for us to look for potential trading opportunity. Welcome guys, I hope that you guys can hear me. Can you say yes in the live chat if you can hear me? And also if you are opening any if you are looking at any instrument, you can say or you can name that pairs that what you are looking at. And in addition to Xauusd, you can see British pound US dollar currently having a significant trend here. British pound US dollar coming for a pullback, dollar as well, euro dollar, Xauusd. Here we can see the market is having that trend in that area. So from the 1 hour, this is very sharp. Now 2 previous hourly candle was strong bull. Now if this current one not being able to create a bigger pullback to this support, it may just next one again push back to the upside after 4-hour close. It may, what I think, that potentially continue, because it's showing that the momentum is very high in this market. So you can see that it's pretty sharply bullish. That's where you can see the market trending, creating series of higher high and higher low in this market. So lower time frame here you can see sideways and expecting a breakup structure. We might see that breakup structure. You can see after this green candle the bulls couldn't create a new higher high. Instead the market is trying to here a pullback to this support level, and that could be a zone that we might be able to look for a bullish entry opportunity in this market. If you look at the 30 minutes, this is key level of support. Previous swing high also is here, and that's where you can see the market is slowly trying to pull back down here. So you can see that pullback, and that pullback is essential to see that the market is breaking below that key level of support before you look for that entry. Now from the 1 hour, this is what I was looking at as there is a quarter like session close coming. Now this 1 hour candle if suddenly drop to that 3375 level, or even breaking below here, which will almost will be testing this swing high here. So the previous swing high is here, and this zone is a very critical zone to look to see that the market is coming here, testing that low and then rejecting back to the upside. And also it's aligning with the 15 minutes 20 EMA, this zone here. And this is the support that we are talking about in a couple of minutes ago for the market to potentially come back here to retest. Welcome. Join late, that's okay, Kevin. So thank you for sharing your trading experience with us. God bless. God bless. Yep. Becoming a trader is always rewarding, right? So even if you join late, you still get the reward if you know how to take the calculated risk when you are trading. The best way is, as a trader, is to remain disciplined in terms of your entry. The less time you spend in front of the chart after you learn is better. When you are learning, when you are watching the live session here, we spend plenty of time, but that's for learning purpose. But when you understand everything, when you become a better trader, it's always best to sit on a specific time and then trade and then go ahead. So if you look at, for example, if you are trading on the 4-hour chart, then probably 15 minutes earlier than the candle close, see that how the candle has closed, and based on that you can make a trading decision. The tool that I am using, that we have in the academy, also help us to understand the entry, just 5 to 10 minutes that we need to spend each day to find the trade setup, right? So trading is rewarding because it doesn't require plenty of time that you need to give. A successful trader, they normally trade on breakfast or lunch or dinner, right? That much of time that you need to make more than full time if you know how to do that. So that's why it's so important that keep always a long-term vision as a trader. So it's not a short-term game, it's a long-term understanding of the market. And then once you become good at it, once you have a strategy, once you know how to do the risk management, you understand all the mistakes that might happen when you are trading, that's where it becomes much easier to just set up the trade. There are many strategies. You can trade on very lower time frame, or you can trade on the higher time frame. If you use a strategy that is proven and back tested, you can rely on, then set up the trade, forget it. Set up the trade, forget it. Right? That's all you need. Even a trader can use a very simple trend trading strategy with a higher reward, with proper risk management, can remain profitable long term. It's all about being disciplined as a trader and then trade based on that. Now if you look at, for example, this market, right, on gold, if you are a trend trader, when the market trading above 10 EMA, take the trade accordingly and then let it run full spectrum to its full potential to the profit target. That's all you need. And this is the biggest struggle for most traders. You see that. About the gold done. Now 15 minutes chart that we can see gold after cross of this support, we can see the market is breaking to the upside again with another momentum. Good evening, welcome. So we see that almost nearly to 4-hour close, and there's a 15 minutes close coming also with a bigger momentum. And the market after break of this low, you can see whenever it's crossing this low, getting that rejection. So you may see that the trend continuation here. And but when we are looking at the 1 hour, That's where the support, you can see from here, the market is getting that rejection back again. So with a move here, that you can see the market from this support level getting the reaction back to the upside. We'll be waiting for a price action confirmation. Be back in a few minutes. So that being said, the market, we can see again started to return in the, if you guys look at it, you can see started to bounce back above to that level. So as in the 4-hour close, which is, if you look at here, it's a huge bullish impulse. The market is approaching now this previous important level of daily resistance, which is if you look at here at 3394 level, and now that's a massive bullish impulsive move back to the upside on this market. And we may see that potential a full continuation here. It's a very stronger momentum in this market. This is the 30 minutes also showing that bullish impulsive move back to the upside. That being said, the market is trying to push back again to the major direction of the trend, and with 1 hour bullish price action and the 4 hour combining together, which is showing a stronger bullish impulsive move back to the upside here. And this is an inverted head and shoulder showing a significant bullish momentum here, which is showing that the market may continue to rise here. And I'm focusing on the 30 minutes price action here at the moment, which is after this doji, the price has crossed that low, now reverting back to the upside. Now if the 30 minutes coming here before the candle close, we may be able to see another move back to the upside. So there is a weak fill possible here on the lower time frame, and So you can see the market is trying to push back here. So if you look at the 4 hour here, again we can see the market before the candle close trying to pull back, and what I think that here you can see is just trying to get the liquidity from this support level, and which is a pretty sharply bull market. Getting some rejection here. So once we see the price, you can see the 4 hour candle close coming up, and with this 4 hour close, expecting it to rebut again in the major direction of the trend. So with the 4 hour close coming up, the market is trying to push back again in the major direction of the trend. So this is the 4-hour close candle close coming up, and after the candle close we might see the price to revert again in the major direction of the trend, or to drop down again to the support level. So waiting for the candle close coming up. So here you can see there is a candle close, and we might see now there is an imbalance here to fill that zone. So with the 30 minutes candle close, there you can see the price is trying to push back as it's a long-term bull market. Here it's this is the 5 minutes candlestick pattern. So if you look at the how the market structure is forming, this is the 5 minutes, and if the price getting rejection from here, as you can see, it's tested the 20 EMA, and from this zone expecting is the price to revert back again to the direction of the major trend. And here is the price is trying to pull back in that area where the major trend is up, and the potentially the price to has got that rejection back again. So here, if we look at the 4-hour closed, and there is a long wicket left here, and most likely we see that the price to go back up to fill that long wick, which is potentially to the major direction of the trend. So looking at this lower time frame price action, again there is a doji formation on the lower time frame, and the 4-hour price action that has formed with a bigger wick here. So as a rule of thumb, the market to go back up to fill that long wick, which that we can see left a gap and imbalance to the upside here. If you look at here, you can see it left a bigger gap, an imbalance to the upside, and the market potentially to trend continue to rise to create a new higher high in this market. So you can see the market is pushing back here, and anytime the price is heading back below, we can expect it to revert again to the upside to create a new higher high in this market. So if you look at here, the previous 30 minutes candle is a bullish engulfer in that area, which we can see the prices cross that low and then form this bullish long wick with a long wick at the top. The price from this support level started to push back here, and that market may potentially continue to rise here. So for us, as the first day of trading week, for a suitable entry, as waiting for a clear break of structure, we can see the market coming to near to the 20 EM and getting the rejection. So it is a sign that the market may continue to rise, but at some point we will see that break of structure. That means the price to come back below 20 EMA and then to start to trend back again to the upside. This is the zone potentially be looking for entry. Patience is key. First day of trading week, we are not on hurry to directly jump on a trade. As you know, the someday you might have quite a few trades, someday you may not have any trade. So that's how trading is. I'm waiting for suitable entry opportunity. Throughout the session, we'll be looking to enter. And thank you very much for joining this session, guys. And I'll see you again very soon, trading live together. Due to the time constraint, I'm not going to continue longer this session, but still we'll be looking for entry once we see that. Thank you for joining, and I'll see you again very soon, trading live together. Until that, stay well, stay happy. Tomorrow coming on twice. Stay tuned there. We definitely will have some